The cryptocurrency market is experiencing a seismic shift. Institutional investors are increasingly entering the space. This surge is driven by several factors. Bitcoin's limited supply and decentralized nature make it an attractive hedge against inflation. Ethereum's smart contracts open up possibilities for decentralized finance, or DeFi. More institutions recognize the potential of cryptocurrencies, leading to a significant influx of capital. This adoption is driving demand and contributing to market growth. Major players like MicroStrategy, Tesla, and Square validate cryptocurrencies as a legitimate asset class. This trend is still in its early stages. As institutions understand the crypto ecosystem, we can expect greater investment. The political landscape is also playing a crucial role in shaping the future of cryptocurrencies. Governments around the world are beginning to recognize the transformative potential of blockchain technology. While some remain cautious, others are actively working on creating regulatory frameworks that foster innovation and protect investors. The United States in particular is seeing a growing bipartisan push for crypto-friendly legislation. Lawmakers are increasingly engaging in discussions about how to regulate cryptocurrencies in a way that encourages innovation while mitigating risks. The introduction of bills like the Lummis-Gillibrand Responsible Financial Innovation Act is a positive sign that the United States is moving towards a more balanced regulatory approach. Clear and consistent regulations are essential for the continued growth and adoption of cryptocurrencies. They provide certainty for businesses and investors, fostering trust and confidence in the market. As governments around the world work towards establishing comprehensive regulatory frameworks, we can expect to see further institutional adoption and mainstream acceptance of cryptocurrencies. Stablecoins pegged to fiat currencies like the US dollar are crucial in the crypto ecosystem. Their stability makes them an attractive alternative for everyday transactions. They bridge traditional finance and decentralized finance. The stablecoin market has seen explosive growth, driven by digital dollar demand, DeFi rise, and faster cross-border payments. The potential of the stablecoin market is immense. Analysts predict it could become a multi-trillion-dollar industry. The approval of Bitcoin exchange-traded funds, or ETFs, has been a major milestone for the cryptocurrency market. ETFs provide a regulated and familiar way for institutional investors to gain exposure to Bitcoin without directly holding the underlying asset. This has opened the floodgates for institutional capital to flow into the crypto market. The launch of the first Bitcoin ETF in the United States was a watershed moment. It signaled to the world that Bitcoin had arrived as a mainstream investment asset. Since then, several other Bitcoin ETFs have been approved, providing investors with more options to invest in Bitcoin through traditional financial channels. The availability of Bitcoin ETFs has made it easier for institutional investors to incorporate Bitcoin into their portfolios. This has led to increased demand for Bitcoin, contributing to its price appreciation. As more ETFs are approved and the market matures, we can expect to see a more significant influx of institutional capital into the Bitcoin market. Section 5. Beyond Bitcoin, Wall Street's growing appetite for Ethereum and beyond. While Bitcoin remains the dominant cryptocurrency, Wall Street is increasingly looking beyond Bitcoin to other promising cryptocurrencies and blockchain projects. Ethereum, the second largest cryptocurrency by market capitalization, has emerged as a major area of interest. Ethereum's smart contract functionality has unlocked a world of possibilities for decentralized applications, or dApps. From decentralized finance known as DeFi to non-fungible tokens, or NFTs, Ethereum is powering a new wave of innovation in the blockchain space. This has attracted the attention of Wall Street, with many institutions exploring opportunities in the Ethereum ecosystem. Beyond Ethereum, investors are also exploring other promising blockchain projects, such as Solana, Cardano, and Polkadot. These projects offer unique features and capabilities that are attracting developers and investors alike. As the crypto market matures, we can expect to see a more diversified investment landscape, with institutions allocating capital across a wider range of cryptocurrencies and blockchain projects. Section 6. Solana and the expanding universe of blockchain applications. Solana is a high-performance blockchain platform that has gained significant traction in recent years. Its fast transaction speeds, low fees, and scalability make it an attractive alternative to Ethereum for developers building decentralized applications. Solana's unique architecture allows it to process thousands of transactions per second, making it suitable for high-throughput applications such as decentralized exchanges, gaming, and NFTs. Its growing ecosystem of developers and projects is a testament to its potential. The rise of Solana highlights the expanding universe of blockchain applications. Blockchain technology is no longer limited to cryptocurrencies. It is being used to create innovative solutions across various industries, including finance, supply chain management, healthcare, and more. As the technology continues to evolve, we can expect to see even more groundbreaking applications emerge. Section 7. Navigating the regulatory landscape. Challenges and opportunities. The regulatory landscape for cryptocurrencies remains complex and evolving. Governments around the world are grappling with how to regulate this new asset class, balancing the need for innovation with the importance of investor protection. The lack of clear and consistent regulations creates uncertainty for businesses and investors, hindering the growth and adoption of cryptocurrencies. However, it also presents opportunities for those who can navigate this complex landscape. Companies that can adapt to the evolving regulatory environment and build trust with regulators are well positioned for success. The crypto industry is actively engaging with regulators to shape the future of crypto regulation. By working together, the industry and regulators can create a regulatory framework that fosters innovation while protecting investors and ensuring the stability of the market. Section 8. The future of crypto, a transformative technology in its infancy. The cryptocurrency market is still in its early stages of development. Despite its volatility and the regulatory uncertainties, the underlying technology has the potential to revolutionize various industries. Blockchain technology, the foundation of cryptocurrencies, enables secure, transparent, and tamper-proof transactions. This has far-reaching implications for finance, supply chain management, voting, identity verification, and more. As the technology matures and adoption grows, we can expect to see a profound impact on our lives. The future of crypto is bright. While challenges remain, the potential benefits of this transformative technology are too significant to ignore. As more people understand the power of blockchain and cryptocurrencies, we can expect to see continued innovation and adoption, leading to a more decentralized and equitable future. Section 9. The importance of education and due diligence. As with any emerging technology, education and due diligence are crucial for anyone looking to invest in or utilize cryptocurrencies. The crypto market can be volatile and complex, and it's important to understand the risks involved. Before investing in any cryptocurrency or blockchain project, it's essential to conduct thorough research, understand the technology, and assess the risks involved. It's also important to only invest what you can afford to lose and to diversify your investments. There are numerous resources available to help individuals learn about cryptocurrencies and blockchain technology. From online courses and tutorials to books and podcasts, there are plenty of ways to educate yourself and make informed decisions. Section 10. Disclaimer, not financial advice. The information provided in this essay is for general knowledge and informational purposes only, and does not constitute financial advice. Cryptocurrency investments are speculative and involve a high degree of risk. You should not rely on this information as a basis for making any investment decisions. Before making any investment decisions, it is essential to conduct your own research. Consider your investment objectives, risk tolerance, and consult with a qualified financial advisor. The author and publisher of this essay are not liable for any losses or damages arising from any investment decisions made based on the information provided herein. Section 11. Conclusion, a new era of finance. The rise of cryptocurrencies and blockchain technology marks a new era of finance and technological innovation. While the journey is still unfolding, the potential impact on our lives is undeniable. As we navigate this exciting new frontier, it is crucial to approach it with a balance of enthusiasm, caution, and a commitment to ongoing learning and understanding. The future of finance is being shaped by the convergence of technology, innovation, and the collective desire for a more decentralized and equitable financial system. By embracing education, due diligence, and a spirit of collaboration, We can harness the transformative power of cryptocurrencies and blockchain technology to create a brighter future for all.